good, everybody? Welcome to the Closing Beat. Happy Thursday. Hope you're having a great day. We're financial advisors here at Jazz Wealth. It's just a quick show that we do to kind of overview the markets, the good, the bad, and the ugly there. So hopefully we can help you in some way. Tomorrow there will be no Closing Beat, by the way. Taking the day off, so no shows tomorrow. We'll cover the markets here. But before I go, tonight we've got a little geeky meetup where we're going to talk about moving averages and sort of the details behind those. Do an old school class for you and sort of help those of you that like to trade outside accounts. Email invite has already been sent out. Sunday, I'm likely going to send out a video going over March for our customers, so you know March will be more active. We overviewed February, went through the whole deal with you. That's in the dojo, by the way, if you want to watch. But March will be more active, so I want to highlight that and let you know what to expect, because I'm the guy that likes to tell you ahead of time instead of I told you so. So we'll knock that out. Anyways, the month's over. That's it, right? We ended with a little bit of a down day. Today's February 28th, it was a shortened month, of course. And just know, right, if you're out there and you're investing and you go, well, this February, that was pretty cool. Not really a whole lot happened. March will be more active. Don't forget that. Okay. As far as the first 2 months of the year, here's what we got. So first 2 months of the year, obviously very strong. You've seen the rally off the bottom, you know, from everybody that sold out in December. Now they're chasing on the way back up. This is the fifth strongest start for the S&P 500 in history. Go back to 1928, it's the fifth strongest start. You actually have to go back to 1987 to find a stronger start than what we have here, about a 12% rally. In 1987, it started the first 2 months of the year, added up to 17% right in there. And actually, if you look at 1987, it finished for the rest of the year. You go, well, how'd the year end? Finished down 13%. So the first 2 months of the year, it was up 17%. By the end of the year, it was down 13%. Can anybody tell me why? Does anybody want to take a shot in the dark? Does anybody know or want to leave a comment below? Somebody will guess it. But that was 1987. So the point is, off to a great start. It's obviously a record start, but March will be more active. So just come on now. Need you to know that. Okay, let's go over to the markets and talk about them here for a little bit. Here's the S&P 500. If you've been tuning in for the past couple days or weeks, then you know we're basically right at resistance. Resistance is just simply defined as an overhead ceiling, right? A point where the market reaches resistance and no longer can move higher. The good news is we're marking time at that resistance, meaning we're just chopping sideways. There's been no pullback at all, although people would be welcome. A pullback would be welcome. You have the biggest investors in the world asking for a pullback in the market. It just won't do it. So everybody's happy to sit right at resistance and see what comes up next. Now today, we had earnings news, not really good earnings news, by the way, that came out. You also had Trump walking away from the meeting. It wasn't that he walked away. The media makes it seem like he got in some huffy, pissy fit or whatever you call it, and he walked away. No, we just can't have a deal at the moment. We can't agree to their terms. Nobody wanted to agree to their terms. That was never going to happen. And so they said, okay, well, let's wrap it up. We'll come back another time. There's already talks that they'll meet again. They're going to keep working on it. There's nothing life-changing that happened from this event other than the fact that we just paid a bunch of money to send a bunch of people over there to Vietnam to have a little mini vacation. So, yeah, we'll see. Anyways, S&P stuck at resistance. Let's move on. You got the Nasdaq just above the 200-day moving average, looking good there, just trying to push, also marking time, right? Just moving sideways. You call that a time correction, meaning there's no pullback, no price correction. It's just a time correction. The markets sit patiently and wait. And the Dow pulling back just a little bit there, not too big of a deal. Let's look at the different sectors. There's a lot going on today. I'll try not to waste too much of your time. Because of the Trump news, I thought, well, let's look at South Korea. That was supposed to be a big deal for them. They obviously want South and North Korea to get along, and that could have been a huge step towards that. We ended with nothing. So if you look at South Korea, the ETF, that's all only way I look at it. The symbol is EWY if you want to follow one of the more popular South Korean broad-based ETFs. Down about 2% today, and that's all because of the news there. So back towards the lower end of the range. Also stuck under the 200-day moving average, just like the U.S. Isn't that cool? Okay, looking at REITs. So REITs had a little strong move back above the 20-day moving average. Yesterday we talked about it falling below the 20-day for the first time all year long, right? Pulling back under it anyways. Today it was very strong, hit highs and more selling pressure. So that tells you This thing pulling back is still not out of the question. If you're a technical trader and you want to buy a pullback, you're excited. You like the fact that there was a lot of buying today and it didn't finish all that strong. So not bad there. I mean, still a very strong sector. You can't argue with this thing pulling back if it wants to. It'd be more than fine. Why is it making noise? Got a new computer here. It's weird. So consumer staples got a decent day there, about 0.5%. And as far as strong sectors of the market, it's about as good as it gets today. 0.5% gain. Oil, utilities, all right at 0.5%. Nothing really gained any more than that. Well, consumer staples here today, sort of I want to say broad-based rally. I can't quite say broad-based rally. You had Coca-Cola adding almost 1% on the day. That makes up about 10% of consumer staples ETF there, by the way, which is, I don't know if you like following ETFs for your sectors, but XLP is the one I'm talking about. So Coca-Cola makes up about 10% of that one. You also had Costco. I wanted to point this out. It was just a nice little up day. That to me is a technical gift there if you like looking at these stocks. I'm not telling you what to do with it, but a little help from Costco. Walmart about 1% on the day as well. Let's check Pepsi. How'd that finish? Oops, there you go. Yeah, Pepsi, decent day as well. So, not bad. That helping the consumer staple stock sector stand out here a little bit today. All right, one little weak spot, although it didn't finish so bad, oil service stocks. So OIH is the oil service companies as a whole. These are your transportation, your drillers, anything that services oil. There's some real obscure ones in there. But OIH is the ETF I like to use for that. You had Schlumberger. This is one of the bigger holdings in this sector, and bigger names, by the way. Schlumberger losing a little bit. It did close off of its lows, so that's positive there. And then Halliburton's always the next go-to name that I look at, and that lost almost 2% on the day. Those two names, by the way, are the bulk of this sector. So I believe it's like 35% of the OIH. So that explains why that was one of the more weaker areas if you follow oil-related type products. I'll just point out home builders continuing to pull back, not a big deal. Consumer discretionary continuing to pull back, not a big deal. Retail pulling back, that's just a choppy little uptrend there if you're following along. And speaking of retail, we'll move on to individual stocks right now. JCPenney, there you go. Big move over this range today. So if you like looking at the end of potential downtrends, you're working on it here with JCPenney. It broke out over this range. It's not a prime breakout that technical traders will chase themselves to be a part of because it's in the middle of a downtrend. Right? If you're going to play a breakout, you want to play a breakout that continues an uptrend, right? You want something to trigger a new round of buyers. You don't want something that just triggers a little short covering and then, let's see what happens. You want the bulls to be excited. So that one loses a point or two in my book. But anyways, coming out of the downtrend there, earnings beat by 8 cents. That was a great beat, actually, on earnings. Revenue better than expected. They're going to close about 18 stores, which is great. It just shows that they're getting their dough straight. They're cutting out all the fat. They're going to cut out all the stores that aren't really participating as much. Investors typically like that when a company that's a little heavy starts saying they're going to close stores. And from a technical perspective, I won't say that it's a trade or it's something exciting right here, but it's one that goes on the radar. You know what I mean? Like some things grab your attention and you just dive in and you got to have that trade. This one, I don't think you're there yet. I think it just goes on the board or on a watch list or whatever it is that you do to track things you might be interested in. Okay, moving on. Box down about 20% on the day. Whoa. So Dropbox is sort of eating them for lunch. Earnings were better than expected, but revenue came in lower on the day. Did we get all this right? Yeah. They lowered their guidance going forward. For Box, the focus is on billing. What are they billing out? What are they getting? And customer acquisitions. Both of those sucked, right? They just was not good for them. And they had comments about their competition. They were very particular about those comments. I don't like that when companies do that. I wouldn't. If I was the CEO, I would. Anyways. So Square, 2.5% gain on the day today. Beat on earnings, beat on revenue. Everything looked good there. They had weak guidance for this current quarter. But, people kind of shrugged that off. That dip today, well, you could see it. See the dip early today. If I zoom in here, you can see the stock gapped lower and sold off this morning. That little dip from yesterday to here was enough to convince buyers they wanted to be a part of that. Square is just an incredibly strong stock. So it's up about 40% for the year. So people are, momentum traders, just sort of interested in that one. Anyways, earnings related, that did well, 2.5% on the day. SeaWorld, the symbol is SEAS. Stock higher by about 8% on the day. Missed on earnings, but they beat on revenue. And what do you think the metric is for SeaWorld? So you know how we talk about Netflix being subscriber count, Facebook, Snapchat daily active users, billings for box. What do you think SeaWorld would be if we had to track a metric? It seems pretty obvious. Park attendance. So everybody looks at earnings, revenue. It's great, but SeaWorld, park attendance. How you doing with your park attendance? Up 8% year over year. That was a great beat for them as far as expectations go. And if you follow here, look, technical traders, if you like using the charts to make your decisions, this one goes on a list too. See what happens? You got this You got a downtrend here, very much clean, moving lower, moving lower, moving lower. Break above it on good news, basically a good earnings report, and that grabs your attention. So that's all I have to say about that one. Sotheby's, the symbol is BID, B-I-D. That stock broke out of a little range today as well. But again, right, this one's kind of like JCPenney. It's just okay. It grabs your attention, but I don't know that you go diving in. Beat on earnings, beat on revenue. The company actually said that they are in a position to improve even further, provided everything stays the same economy-wise. And they're a high-end auction house, so that's impressive that there's that much going on the high end, and they expect that to continue. Western Union, not much happened out of this one today. They're selling a speed pay bill. They call it speed pay bill. They're selling it for $750 million. They're buying back $1 billion worth of shares, which is another huge buyback. So Foot Locker was the biggest one with $1 billion share buyback with only a $10 billion valuation, meaning the company's worth $10 billion. They're buying back 1/10 of all those shares. That's impressive. Western Union, they're less. They're buying back $1 billion worth of shares, and they're only worth about $8 billion. So huge buyback there. So Tesla is out with their news. Let's cover that one. So Tesla was hinting at some news coming out at 5 o'clock today. I guess they're launching a $35,000 model with a shorter Model 3 with a shorter range, and they're going to be selling online worldwide only. Cutting costs there, huh? Anyways, Baird, the analysts at Baird got ahead of that one today. They called it their fresh pick going forward, and that all of the demand for the Model 3, there's been a reduction in the demand for Model 3. They said all of that's overblown and it's already priced in. So they're basically saying all that bad news that's happened recently, investors have already priced it in. They called it their fresh pick, and they're bullish on Tesla. And now you know the news. Okay, so Fitbit earnings, much better than expected. They actually doubled expectations if you look at their earnings. Revenue better. All guidance going forward was the problem. So they basically said nothing good is going to happen going forward. We did really well before. We're selling a lot more devices. It's great. Everything's going well. However, we have to sell them at lower prices. People don't like to see that. All right, Monster beat on earnings. That's a strong move today. Broke to new highs, up 9%. That's a beast of a stock. If you happen to follow that stock, that thing can move, man. There's a lot of earnings out here after the close. I can't really keep up with all of it. We'll just cover it another time. That's basically all I have for you. If you have any questions, I'd be happy to answer any questions for you. There you go. There you go. You like some QCOM, do you? Yeah, kind of interesting, huh? Got a good, decent dividend there. They seem to be kicking Apple's butt in court. And if you like discounted stocks, did a video on that one, QCOM included. But you're right. Yeah. Yep. What else? Let's see. Yeah, that's basically all I got. I'll wait for just a second if you have any questions. Let me pull up the S&P, make sure I didn't miss anything. Monster was your leader. We covered that one. Southwest Airlines, 4% today. They won the So Southwest not won, but they got their FAA approval to fly from California to Hawaii. They've been trying to do that for a while. That's been quite an undertaking for them, so that looks good. Oh, Kraft Heinz was in the news today. 3G, thinking about buying them or just taking them over, so that could be good news. Stock was higher by 3% on the day. And your gaming stocks, Take-Two, little reversal on Take-Two if you like that sort of thing. Yeah, CarMax, yeah, there's a lot of talk about slowing auto sales and people being delinquent on their payments. I think that's going to be something we start talking about more. Hewlett-Packard down 17%, that's earnings as well. Limited Brands down 4%, that's earnings there. Not a bad move to the downside. General Electric pulling back. We covered a lot of the other ones there. Yeah. Okay. What else you got? Anything? Oh, what about Viva? So very strong here, obviously, very strong performer. This is the kind of one you want to see mark time go sideways, then break out from there. So we were mentioning JCPenney and the others about breaking out of downtrends, not so exciting. If something like this would base sideways, that would be a more interesting one on Viva. I saw them in the news today, but from a technical perspective, that'd be more interesting there. Maslam just finished maxing out his Roth IRA for 2018. You the man. Good job. Good job. Now, see, that's great. Now on to 2019. For those of you that don't know, you can fill up your IRA for the previous year up until tax day. That's what he's talking about there. Gap, yeah, sharply higher after earnings here as well. They're going to split into two companies. And I think you're going to find a lot of people say, it's about time. So look for the Gap to start to gap higher tomorrow. Nordstrom in the news as well. That one's also a little bit higher, trading back to almost $50, which is where, remember they wanted to take the company private, the owners, and they weren't able to at $50 a share. Looks like a decent deal now, doesn't it? Black Monday, I'll give it to you, Javelian. You got it. So why did the markets finish lower by 13% in 1987? A lot of that nastiness coming. Well, you mentioned a lot more, which is great, but we got crushed right at the end of the year or towards the end of the year. Yep. Okay, cool. I'm going to wrap it up there. I appreciate you guys watching. If I helped you in some way, hit the subscribe button. And I don't know if you could tell this, but if you look over my shoulder, we got a new board. I can't wait to do the new videos with this board. It's not a blackboard, it's not a TV, it's something completely different. I can't wait to show it off. So I'll be doing that. Look for the videos to come out next week with the new board, and I can scribble. You guys will be able to see it. I might test it out tonight on customers. We'll see. Anyways, you don't care. I'm gonna get out of your way. You enjoy the rest of your day.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes